Hi, I'm Jimmy. In this video, we're looking at the fact that Intel is talking about bringing their Mobileye business public. What does Mobileye mean for investors? And ultimately, what is this going to do to, what's the long-term plan here for Intel and ultimately Intel investors? Now, in the name of full disclosure, I personally own shares of Intel, but I'm going to try to remain as objective as possible and talk about some of the pros and cons of what they're doing with Mobileye, and ultimately how this might affect the investment. Okay, so let's jump right in. So first, what is Mobileye? Well, basically, Mobileye, they create technology for autonomous vehicles and driver safety. So clearly, this has a big future. And this might also explain why Intel, back in 2017, announced the acquisition of Mobileye. At that time, they announced it was going to be about a $15 billion deal. So in 2018, the Mobileye business came under the control of Intel. And since then, Mobileye has continued to grow quite nicely. In fact, this is a chart of Mobileye's revenue, and we can see the nice jump in revenue when they joined with Intel back in 2018. And growth has continued quite nicely since then. Now, I threw in the past 4 quarters because we're going to use that final number in a minute. But since 2014, Mobileye has grown at a compounded annual growth rate of more than 40%. Now, I threw in the past 4 quarters as well because we're going to go ahead and use that number in a minute. But either way, we can see that during this time period, since 2014, Mobileye has grown their revenue by more than 40% a year. Right now, they've only got about $1 billion a year in revenue, so clearly there's a ton of upside. And to put this growth in perspective, over this same time period, Tesla has grown their revenue by about 47% a year. So a bit better than Mobileye, but not too much better. So, simple enough. Now, let's look at what Intel is proposing to do with Mobileye's business going forward. So one of the real issues for Intel, which apparently they're trying to correct with what they're doing with Mobileye, is when we look over the same time period, this is Intel's revenue without Mobileye included. And then when we go ahead and add Mobileye to their business, to their overall revenue, we can see it doesn't really impact, it doesn't make a huge dent in what Intel is ultimately doing. Sure, the growth potential is there, and that's why Intel bought them, but purely from a numbers perspective, Mobileye just isn't moving the needle enough for Intel at this point. So the idea that Intel apparently came up with was to spin Mobileye off into their own standalone company. Now, spinoff is actually a bad way of putting that because it's technically not a spinoff, but we'll come back to this in a second. To illustrate, this is a pie chart of Intel and Mobileye's revenue over the past 12 months. And we can see that Mobileye represents less than 2% of total revenue. Now, our first question is probably, how much is this worth to Intel? When we jump over to our fair value calculation for Intel stock, we get a fair value right now for Intel of about $66 per share. Right now, Intel's trading closer to $51 per share, so it looks like it could be slightly undervalued at this point. That's the reason I personally bought shares. Now, I use the required rate of return of 7.5%, and if we don't think that that's a fair number to use, even if we use Intel's own weighted average cost of capital, which right now is coming in at about 8.1%, the stock still looks undervalued. Now, if you're curious, this is actually a website that this is a spreadsheet that we modeled out so we can build a website that will ultimately do this. The goal of the website is to make it quick and easy to calculate the fair value of different stocks. We're starting with discounted free cash flow, but before long, we're going to be adding a whole ton of different valuation methods that work in a bunch of different investing scenarios and different types of companies. We're working to make these calculations work for stocks all around the globe. So basically what we're doing is we've found data sources that give us analyst estimates for free cash flow, or maybe we want to use analyst estimates for revenue, or maybe we want to use our own estimates. That's what these buttons would do. Either way, this can be a great way to figure out whether or not companies are whether or not they're fairly priced today, and hopefully this can help improve our investment portfolio, give us an idea of what companies are better to buy, which companies are better to sell. Now, hopefully we'll have this website up and running in the first half of 2022. But if you sign up before the website is live, whatever price you sign up at, we're going to lock that price in forever. So if you sign up today, you're locked into that price forever. We will never increase the price on you. I will leave a link in the description below for how to sign up. And in the meantime, we actually do private investing live streams. We have a private investing community over on Discord. So if you sign up, you get access to that in the meantime. But the website, again, we're looking to have that out at the first half of 2022. Okay, either way, back to Intel. Now, we could go ahead and use our calculation of fair value for Intel stock if we want to. Or let's actually be conservative and take the current market value of Intel, the entire company, and say that, well, this is what the market is currently valuing Intel at. So let's assume for a second that they're right. So right now, Intel has a market cap of about $208 billion. That's with Mobileye as part of the company. So a total value of $208 billion. But Mobileye represents just 1.4% of the total company as far as how much revenue they're generating. So 1.4% of $208 billion is about $2.85 billion. So let's say that Mobileye is worth about $3 billion for Intel. But estimates already have that if Mobileye spun out or if Mobileye became their own standalone company, estimates are that their company would be valued at about $50 billion. So instead of being worth $3 billion within Intel, well, it could be worth $50 billion outside of Intel. Now, here's why this is important, and this brings us back to the point where I said before that it was a spinoff, and then I corrected that. It's actually an IPO. In a spinoff, Intel would essentially break off the Mobileye piece of their business, and they would give those shares of Mobileye to their investors. So we would end up with shares of Intel and we would end up with shares of Mobileye. Sort of like what AT&T is doing when they're spinning off their Warner Media business. So for Intel, if Intel were to do that, well, we'd end up with shares of both Intel and Mobileye, which would be great. But it doesn't seem like that's where Intel is going. It seems that what they're doing, they stated that their intent is to bring Mobileye as an IPO. So yes, they are essentially breaking out the very same business, but instead, what they're doing is they're bringing that piece of the business public. They go to investment banks, they bring it public, and they then get cash for the business, for the piece of the business that they're bringing public. So if it really is worth $50 billion out in the public markets, well, assuming on the day that they go public, they say that they're going to maintain controlling interest in the company. To keep controlling interest, you got to have more than half the company. So let's say they keep 51%. That means that they roll out 49% and they sell that to the public. Well, if it's really worth $50 billion, that would mean that they would get about $24.5 billion. That's because the whole business is worth $50 billion. Well, the 49% that they're spinning off is worth $24.5 billion. Whatever investment bank they're dealing with gives them the cash for that. And just like that, they got to keep control of Mobileye and get a big cash infusion. Now, on a personal basis, I would have preferred that we got a piece of Mobileye as the standalone company. But I do get where Intel is trying to go with this. Now, when we go back to our discounted free cash flow calculator, well, we can take a peek at these analyst estimates for free cash flow. And we can see that the 2 years in the middle here, well, these numbers are expected to be much lower. And one of the primary reasons for such a drop in Intel's free cash flow expectations is that Intel has already stated that they're planning on putting up 2 new manufacturing facilities. They're expecting to do that over the next couple of years. So clearly, this is going to cost a decent amount of money. Now, they do have some cash and they have some debt. So we're going to call these two a wash because they're about the same. Yet, if they were to go out and build these buildings, you know what would help with that? Pocketing $25 billion from a company that they can still control, yet keep. They keep control of the company, Mobileye, because they'll own 51% of it, but they get to collect almost $25 billion and go ahead and help grow their underlying business. So at the end of the day, I understand why management is doing this deal. I think it's a smart move from a business perspective. Now, from a purely an investor perspective, again, I would have preferred to have a piece of the Mobileye stock. And who knows, maybe that's a possibility down the road. A lot of the details haven't come out. Right now, the only news that came out was their intention to bring out Mobileye as its own business. Now, The good news, ultimately, in summary, is that they get some cash and can hopefully grow their underlying business and also keep Mobileye in the Intel umbrella. But the downside here is one of my friends, when we first saw this news, one of my friends joked with me that they thought that this was funny, that they thought Intel was going to follow this up with some bad news. And they only came out with this news to try to bump the stock price higher, then they'll come out with bad news that'll lower the price again, end up in about the same spot. I chuckled a bit when he first said it, but I also said, if that's true, if they came out with bad news and then they don't go through with this deal, they don't spin Mobileye off, I would sell the stock immediately at that point. Not because I don't believe that the business has potential, but to me, that would be super deceitful. That would be, market manipulation, and it would probably be the kind of market manipulation they could get away with. But that would be a huge breach of trust. So if management did do that, and I don't think they are doing that, but if they did do that, that would be a game changer for me. So I am sort of watching closely now to see if they come up with really bad news. Now, if they don't come up with really bad news and then later they decide not to do this, it's possible that they change their mind. I'm just suggesting if they're doing it just to try to bump the price higher, I think that would be a mistake, and I would get out of the stock just because I no longer trust management. But assuming that's not the case, I am happy to hold this stock. This is one of my intention is to hold this stock for many years, and I'm happy to sit here and just keep holding this thing. Now, again, if you want to go ahead and get access to the website where we will be able to use this type of, I'm not sure it's 100% going to look like this, but if you want to get access, this will be the basic functionality of it. I'm sure a web developer will do a better job of making it better looking than I have. But if you want to get access, I will leave a link in the description below for signing up to that today. Again, we're locking in the prices if you sign up today. Thank you so much, and I will see you in the next video.